Good morning, everyone. Good morning, everyone. Let me welcome you to MedZone African Motives, whereby today we are on Accounting Grade 12, Term 1 revision. So we are going to do a revision on Term 1. So we are going to be on activities on Accounting Grade 12. And today we are going to do the activity 2. As our last presentation, we did activity 1. So grade 12, let us be together from the start of this presentation to the end of it. It is very helpful for us to revise for the term 1 the term 1 test that you're going to write. Thank you. Let us go straight to the business of today. So here we are on activity 2. Here we are on activity 2. So it says you are provided with information relating to said LTD for the year ended 28 February 2020. So they said that LTD has registered share capital of 200,000 ordinary shares. 40% of the shares had not yet been issued on 1st March 2019. So now required now 2.1 show the effect of the transaction below on the accounting equation. Bank is always favorable at all times. So you are to use the table in the answer book. 2.2 prepare the notes to financial statement for the year ended 28 February 2020. Ordinary share retained income. 2.3 the directors are not sure whether the price of the new shares issued on 1 November 2019 was appropriate or not. Calculate the net asset value per share on the 28th February 2020. So in your opinion, were the directors correct in issuing shares at 6.50 per share? Bear in mind that the net asset value per share for 2019 financial year was 600 cents. Provide 2 reasons for your answer. So here is the information that you're going to use to do our calculations. Balances on 1st March 2019, we have ordinary share capital of 400,000, retained income of 30,000, shareholders for dividends 60,000. So here are the transactions also that took place. 25 March 2019. Electronic fund transfer were made to shareholders in respect of final dividends owing from the previous financial year. 31st August 2019, the directors declared and paid interim dividend of 25 cents per share. 1st November 2019, all the unissued shares were issued at 650 cents per share. All the shares were applied and the money received was deposited. 28 February 2020, directors declared a final dividend 35 cents per share. All the shares are to receive final dividends. The buyback of 20 shares from existing shareholders at 750 per share was authorized, and the necessary EFT, electronic funds transfer, were issued to the shareholders. Net profit for the year was calculated at 420,000. Income tax was calculated at 28% of the net profit, and you are to get 40 marks. So now let's go to the first question 2.1. The first question 2.1. So before we can even get there, we are to know these terms whereby we are going to talk about an authorized share capital. So we are to know what is an authorized share capital. An authorized share capital, which is this amount, that is the maximum amount of share capital a company is legally allowed to issue. Meaning this company said that LTD is allowed to issue how many shares? 200,000 shares. That is the maximum. That is the maximum amount of share capital it is allowed to issue. That is what we call authorized share capital. So we also have ordinary share capital. Good people, ordinary share capital. Ordinary share capital is the money raised by issuing ordinary shares to shareholders. So that is very important to know these terms. We also have issued share capital. Issued share capital, that is a portion of authorized share capital, portion of 200,000. This is our authorized share capital. That is portion of authorized share capital actually sold to investors. Hope you understand. An issued share capital, that is shares still held by a company, not yet sold or issued. Like here it says 40% of shares had not yet been issued on 1st March 2019. Those are issued share capital. Those are issued share capital. They are still held by a company. They are not yet sold. They are not yet issued. Hope we are together on that. Hope we are together on that. So now the 2.1 says, show the effect of transaction below on the accounting equation. The bank is always favorable at all times. So before we can even go there, let us make it easy by trying by all means to do this a short calculation on this. So here we are, like we have said, we have authorized capital. We have authorized share capital of how much? 200,000. These are our ordinary shares, maximum shares that we are allowed to issue. Then we have unissued shares. We have unissued shares on the 1st March 2019. On 1st March 2019. So we're told that 40% of the shares, 40% of shares had not yet been issued. I'm talking of this statement. 40% of shares on the 1st of March had not yet been issued. So here we are, whereby now we're going to write 40% of what? Of our authorized share capital. 40% of our authorized share capital, that is 200,000. So 30% of 200,000 is 80%, is 80,000. So it shows that this 80,000 is unissued shares, is unissued shares. So now we are to calculate what the issued shares. Issued shares, as now we know our unissued shares. So the issued shares now, this is where we're going to say 200,000 of authorized share capital minus unissued shares of 80,000. Then it will give us 120,000. So 120,000 is our issued shares. So hope we understand this. So hope we understand all this. So that is that. So now we are to move on the effect of accounting equation. So here we are to keep this information as we are going to use it later on. So it will help us when we move on. So the 2.1, like it was saying, we are to do what? The effect of a transaction on accounting equation. The effect of transaction on accounting equation. So like it have said, the effect of, get this very well, the effect of transaction. Effect of transaction. So here are our transactions. Here are our transactions, sorry. Here are our effect of these transactions on accounting equation. So on accounting equation, we are not going to write anything that is not the effect on transactions. So let us start with the transaction one, because it said effect of transaction on accounting equation. So transaction one, so let's read together transaction one and try to get it very well. It says, on the 25 March 2019, electronic transfers were made to shareholders in respect of final dividends owing from previous financial year. Electronic funds transfer were made. It means we paid the shareholders that were owned previous year. And then we have what? Shareholders for dividends. So it means we paid them how much? 60,000. So now we go to our accounting equation now. Now we go to our accounting equation now. Here we are on our accounting equation. Like we have said, we have paid our shareholders, because the transaction says that we paid our shareholders for final dividends owing from previous financial year. So you're going to pay them how much? 60,000, which is this amount. So we want to see the effect of that on our accounting equation. Remember, our accounting equation is assets is equal to owner's equity plus liabilities. So this is going to affect our assets. This is going to affect our assets. We are going to have minus 60,000, because now we are going to pay our liabilities. We are going to pay our liabilities as we are going to pay our shareholders. So it means that now our assets are going to be affected. We are going to take money out of our bank to pay our liabilities, which is 60,000. So this is going to decrease our liabilities. Our liability is going to decrease because you're going to pay this. We are going to pay our shareholders. Hope you get it. Hope you get it. So this shows that we are saying dividends payable. We are paying what? Our dividends. This is what? Dividends payable. So that is that. Now we are to move on to another transaction. Now we are to move on to another transaction, which took place on the 28. On the 28. On the 28, which is here, 28 February. 28 February. 28 February says the directors declared final dividend of 35 cents per share, and all shareholders are to receive final dividends. All shareholders are to receive final dividends. So meaning to say, what we are trying to say here now on our calculation is that we are saying the final dividend declared was 35 cents. That is that. Final, that is on the 28th Feb 2020. So final dividend declared is how much? Is 35 cents. Is 35 cents per share. This is what we are told by that transaction. So this is our final dividend. Declared is what? 35 cents. So let's go straight back to it so that we understand it more. As it says, directors declared final dividends of 35 cents per share, and all shareholders are to receive final dividend. So that is that. So meaning to say, now we are going to say a dividend. For us to calculate that dividend, we are going to say 200,000. 200,000 multiply by 0.35. That is our 35 cent, which is now going to give us 70,000. 200,000 is what? Our ordinary share capital. So we are saying 35% of this authorized share capital. Those are the final dividends that were declared per share. So that is that we're going to get what? 70,000. Hope we are to get. This is the final dividends. These are the dividends that we are yet to pay them. We are yet to pay them. We are going to pay our shareholders. So their share is what? 35% on our 200,000 ordinary share. They have 35% of their dividends. So we are yet to pay them. They are not yet paid. Hope we get it. So let us go to our accounting equation. So let us be on our accounting equation. So here we are on our accounting equation, whereby now we are going to have what? 70,000, which is going to decrease our assets. This is going to decrease our assets because you are going to pay our shareholders this much. This money is going to decrease our assets. But these people still, they are not yet paid. So it means here on liabilities, this is going to increase our liabilities by 70,000. Our liabilities are going to be increased by 70,000 because we are yet to pay them. We are going to pay them. They are not yet paid. So, but on the side of assets, we already show it as a decrease because it's going to decrease our assets because we're going to pay out money to our shareholders. Hope you understand that point. So let us move on, good people. Let us move on. Still on the 28th. Still on 28 February 2020. We are still on that transaction. As it says, the buyback of 20,000 shares from existing shareholders at 7.50 Rand per share was authorized. The necessary if it is were issued to the shareholders. So meaning here we buy back shares. As a business, as a company, we buy the shares back to our company. So what we are going to do here is to show the calculation whereby we know that we buy back shares of 20,000 at 7.50 Rand. So meaning we're going to say 7.50 Rand multiplied by 20,000. That is how simple we are going to do it. So we are going to say the buyback of shares, buyback of 20,000 shares at 7.50 Rand. So that is going to be 150,000. So that is that. We bought these shares, 20,000 shares at 7.50 Rand per share. So this gives us what the amount is going to be 150,000. So it means for us to buy those shares, we paid how much? 150,000. So now we are to take it to our accounting equation so that we know the effect of that transaction on our accounting equation. So here we are on our accounting equation, meaning to say this is going to affect our assets 150,000 because you're going to pay out money to buy back shares. So we know that the money is going to come straight from our bank. So, and then you're going to pay who? Our shareholders, because we are now bringing back the shares to our business. So this is also going to decrease our owner's equity by 150,000. This is going to affect our owner's equity because now we are to part ways with this much 150,000. 150,000. This is how it's going to affect our owner's equity. Hope we are together on that. So now let us come to still the same transaction of the 28. Same transaction of 28. Here we are on that transaction. It says the net profit after tax for the year was calculated at 420,000. Income tax is calculated at 20% of net profit. So the net profit after tax. So this 420,000 is now after tax was deducted or was calculated. So it means now we are going to save straight 420,000. We are taking it to our accounting equation where it's going to only affect our owner's equity positively because we are going to have that money in our business. So it's not going to decrease, but it's going to increase our owner's equity. It's going to increase our owner's equity. So here we are, and we are going to write our 420,000. So remember, it was after tax, that is net profit after tax, 420,000. So this one increases what? Our owner's equity. So that is how simple it is. So now let us go to another transactions and see the effect of them on our accounting equation. And see the effect of them on our accounting equation. So here we are on the 31st. 31st August 2019. It says directors declared and paid an interim dividend of 25%. 25 cent per share, sorry, 25 cent per share. That is on the first. So here we are talking about the interim dividend. Interim dividends are those dividends that were paid during the year. Those are the dividends that were paid during the year. So how are we going to calculate it? This is how we are going to calculate it. This is on the 31st August, sorry, 31st August 2019. So we are having what? Interim dividend. Interim dividend. Whereby we're told that this is 25 cents per share, 25 cents per share. So how many shares were issued? We are going to say issued shares. We remember the shares that we issued is what? 120,000 shares. 120,000 shares. And we are told that the dividend is 25 cents per share. We're told that interim dividend paid during the year was 25% per share. The dividends that were paid during the year. So meaning to say we're going to have 120,000 multiplied by 0.25. 0.25, which is 25 cents. 0.25. So 120,000, these are our issued shares. Yes, our issued shares. So the shares on the 31st, 2019, we are told that they were issued at 25 cents per share. So that is why we are multiplying the issued shares of 120 multiplied by this 25 cents per share interim dividend. So this is going to give us how much? 30,000. This is going to give us 30,000. So that is that. So now we are going to our accounting equation now and record it. Now we are going to accounting equation. So now we record it on our accounting equation now. We are on our accounting equation. We want to see the effect of transaction on our accounting equation. So like we've said, here we are on our accounting equation. So as we have said, it's 30,000 dividend that you're going to pay. So it means now they're going to reduce our assets now. We're going to say 30,000 because we are to pay our shareholders how much? That, or we paid our shareholders because these are the dividends paid during the year. So they're going to decrease our assets. They're going to decrease our assets. And also they're going to decrease our owner's equity. So that is that. There is no any effect on our liabilities. So hope we are together on that. So now let us go to 1st of November now. There is a transaction on 1st of November. As you can see, here we are on the 1st of November. As it says, on 1st November 2019, all the unissued shares were issued at 650 cents per share, and all shares were applied and the money received was deposited. All unissued shares were issued. So like we are saying it's 650 shares. So it means we are going to say 650 divided by 100. So when we are calculating the cents, we are just going to say 650 cents divided by 100 for us to get the 650 cent. So it means the amount for per share is what 650 cent. So what we are going to do, we are going to say shares, unissued shares. How much was our unissued shares? Unissued shares. So here we are. So how much was our unissued shares? Unissued shares. We know very well that our unissued shares were how much? 80,000. So we are going to say 80,000 because we are told that all unissued shares were now issued at 6 rand 50 per share. At 6 rand 50 per share. Sorry. At 6 rand 50 per share. So here we are. So how much is 6 rand 50 multiplied by 80,000? So it's going to give us 520,000. So here, remember we have 30,000. So it's going to give us 520,000. So that is the money that you're going to receive because now we have sold all those unissued shares. So now we go straight to our accounting equation and see the effect of this transaction on our accounting equation. So that is that. So here we are on our accounting equation. So we have said it's how much? 520. Remember, we are receiving it. us as a business, we are receiving this much. So this is going to increase our assets by 520,000. It's going to increase our assets by 520,000, and it's going to increase our owner's equity by 520,000. Remember, we are the one who are receiving that, because on the 1st November, all those unissued shares of 80,000 were now issued at 650 cents per share. So that is that. Hope we do understand it. Hope we do understand it. So now let us move on and see what is left. Now let us move on and see what is left. But we can now see that all the transactions are treated, because we did do the transaction on the 25th, 31st, 1 November, as well as a transaction for 28 February 2020. So now we have to move on to another question. So now we are to 2.2. We are to attend to 2.2, where we know we are going to do, we are to prepare notes to financial statement for the year ended 28 February 28. So before we can do that, we can just try to do like this for our accounting equations. For our accounting equations, we can make it to look smart. So that is that. So this is our accounting equation. So that's all. Now we have to move on to 2.2. We are to move on to 2.2. So this is what we are going to do. This is what we are going to do. This is what we are going to do. So now on 2.2, we are to calculate the notes to, we are to calculate the notes of the notes of financial statements. We have to prepare notes to financial statement. That is 2.2. That is 2.2. 2.2, we are to do notes to financial statement. Notes to financial statement. Notes to financial statement. Notes to financial statement. So that is that, and we are going to first that by ordinary share capital. That is the notes that you're going to start by ordinary share capital. Ordinary share capital. So that is the first note that you're going to do, as we were asked here on the questions that we are to do that. As you can see, so let us see clearly that question. Let us see clearly that question of 2.2. Prepare notes to financial statement of the year ended 28 February 2020. And there we are to do ordinary share capital as well as retained capital. Hope we are together on that. So now, let us be on that. Let us be on those two notes of financial statement. So here we are on our ordinary share capital. We are first going to start with authorized share capital. We are first going to start with authorized share capital. So how much is our authorized share capital? The authorized share capital is what? 200,000 ordinary shares. Is 200,000 ordinary shares. So now we come to 200,000 ordinary shares. Now we come to our issued at the beginning of the year. Issued shares at the beginning of the year. Issued at the beginning of the year. Issued at the beginning of year. How much shares were issued at the beginning of the year? The issued one. So we know we issued how much? 120,000 shares. We issued 120,000 shares. So you can even see here that these are our 120,000 shares that were issued. So here we are on the shares that were issued to remind us how we came up with 120,000 as our shares that were issued. As we can see, you remember that we calculated the issued shares, whereby we subtracted 80,000 from our authorized share capital for us to get this 120,000 issued shares. Remember, our unissued shares was 80,000. So we subtracted unissued from the ordinary share capital for us to get what? This 120,000 of issued shares. So I just wanted to remind you on that so that you're not surprised of where this 120 comes from. So now coming to the amount of the issued shares, we can see here on the 1st of March that the ordinary share capital, the amount for ordinary share capital for the issued shares is 400,000. Is 400,000. So that is that. So now we are to write 400,000. 400,000. So the 400,000 is what? Is the amount for the issued shares at the beginning of the year. 400,000. Hope we are together on that. So now we are to move on now to issued on 1 November. Issued shares on 1 November. Issued on 1 November. So the issued shares on 1 November 2019. So this is where we're going to have the 80,000 time multiplied by 6 rand 80 per share. So for us to get a 520,000 that we talked about. So the issue happened on 1 November. You remember that we were told that all shares that were unissued were issued on 1 November at 6 rand 50 per share. So maybe you want to get it more clearer. Let me just remind you that transaction. Let us go back to it so that it becomes clearer to us. Here is our 1 November that I'm talking about. All the unissued shares were issued at 650. 650 cents is 650% per share. And all shares were applied and the money was received and was deposited. So it means that is 520 that we calculated. So hope you understand, because we know our unissued shares. We know our unissued shares was 80,000. So that's why we multiply 650 by 80,000, because now we are issuing them. So hope it's clear to you guys. Now we come to the buyback of shares. Buyback of shares. As it says, the buyback shares of 20,000 from or shares from existing shares at 750 per share was authorized. So meaning now we are going to write what? A buyback of shares now. We are going to write the buyback of shares. So here we are, and then you write the word, the buyback of shares. Buyback of shares. So our buyback of shares is what? 20,000 multiplied by 7 rand 50. So now this will give us what? The amount, which is 150,000. 150,000. We are putting in bracket because this one, the company is going to pay, is going to spend money on that. The company is going to pay for that. So that is why it is in bracket, because the company is going to pay for that. So now that's all. Now we are to know the issued share at the end. So now we are to know the issued shares at the end. Issued at the end. Issued at end of year. Issued at the end of year, where we're going to have 180,000. So the shares, 180,000 shares. So we know that this is 180,000 shares. So at 770,000. At 770,000, because you're going to add 400,000 to 520,000 and subtract 150, and you get what? 770,000. So that is our ordinary share capital. That is how we calculate our ordinary share capital. Hope you understand it. So we are asked also to calculate the retained income now. We're asked to calculate what? Retained income. We're asked to calculate retained income. So now we are doing retained income note. Retained income. Here we are on our retained income. Retained income note. So the balance at the beginning of the year under retained income. Balance at the beginning of year. At the beginning of year. How much is the balance of the retained income at the beginning of year? So now we are to go and look at the balance at the beginning of the year. So let's quickly go and look at the balance at the beginning of the year. So here we are on our retained income. Balance at the beginning of the year. So you can see now the balance at the beginning of the year is what? 30,000. The 30,000 is the balance at the beginning of the year. the balance at the beginning of the year. So now let us write it. So here we are on our retained income. The balance at the beginning of the year is how much? 30,000. That is that. Balance at the beginning of the year is 30,000. Net profit after tax. Net profit after tax. We know the net profit after tax is 420,000. Is 420,000, which we have seen it, which we have seen that on our questions. The last question on the 28th February, we're told that the net profit after tax for the year, let me make it clear. The net profit after tax for the year was calculated 420,000, and income tax is calculated at 28%. So that is that. So now let us come to our retained income now, as we are still on our retained income. So we have said net profit after tax is what? 420,000. You now know where we got that. So we also have interim dividend. We have interim dividend. Interim dividend, we know very well that this is what? 30,000 that we have calculated. So we are putting it in the bracket because the interim dividend, the business paid out the dividends during the year. They paid what? The shareholders. So this decreases our retained income. This decreases our retained income. So we have calculated the 30% of this. Not 30%, but we have calculated what? 25 cents per share of our interim dividend. This is where we get our interim dividend. 25 cents times 120,000 of issued shares. So these are the dividends that we paid to our shareholders during the year for 120,000 issued shares. Hope we are together on that. So now we are to do what? Final dividend declared. Final dividend declared. Final dividend declared. How much is our final dividend declared? 70,000. You know, we calculated this 70,000. These are the dividends that we are to pay our shareholders. These ones are paid already. The interim dividend, we paid them already. The final dividend declared are the dividends that we are going to pay. They are not yet paid. Hope we understand that. So now we are to have the 70,000. One can now forget where it comes from. This is where it comes from. Final dividend declares, they were declared at 30 cents per share. So we calculated the 35 cents per share of our ordinary share. That's when we got this 70,000. So now the balance now at the end of year. Balance at the end now, at the end of year. So the balance at the end of year is how much? 350,000. So that's when you say 30,000 plus 420,000 minus 30,000 and 70,000. Then we get what? 350,000. So that is 2.2. Hope we are still together, grade 12. So before we can go to 2.3, I remember something. One can ask, where did we get this issued share at the end of the year, or 180,000? The 180,000, we get it. These are the number of shares at the end of the year. This is where we said the ordinary share capital, the ones that we invested in the first of our financial year. minus 20,000. 20,000 is the shares that we bought back. So that's how we get what? The issued shares at the end of the year. So we subtracted 20,000 from 200,000 of our authorized share capital. So the ordinary share capital. So this is where we say 200,000 minus 20,000. Then we get what? The issued share at the end of the year. So I wanted to clarify that so that one cannot say he didn't understand or she didn't. That this issued share at the end of the year. So that is that. So now we have to move on to 2.3, good people. We have to move on to 2.3. So let us be on 2.3. So here we are on our 2.3. Two 2.3 read as follows. The directors, it says the directors are not sure whether the price of new shares issued on 1 November 2019 was appropriate or not. So now we have to calculate the net asset value per share on 28 February 2020. So it further on say, in your opinion, were the directors correct in issuing shares at 650 per share? Bear in mind that the net asset value per share of 2019 financial year was 600 cents. Provide 2 reasons for your answer. So that is that. So now let us go and calculate it. So now let us go and calculate it. So here we are on 2.3. 2.3. So we are going to say 2.3. So we are asked to calculate what net asset value. We are asked to calculate net asset value, that is NAV. So what we are going to do, we are going to calculate the net asset value, whereby we're going to look at the net assets. Net assets at 28 February 2020. So what you're going to do is that we are going to want to know our ordinary share capital. Ordinary share capital. How much is our ordinary share capital? Our ordinary share capital is 770. That is that. It's 770,000. You know where we get this 770. So here is our 770 when we're calculating the ordinary share capital note. So we came up with this amount, 770. You can see I'm talking of this amount. So now let us move on. So let us move on. So this is our ordinary share capital that we have calculated on the note that we asked in 2.2. So ordinary share capital 770, retained income now. How much is our retained income? So our retained income is 350,000. This is the note that we have just calculated. Here it is 350,000. So now our net assets is now is equal to our net assets is now 1 million 120,000. So that's when you add 770,000 plus 350,000. So you get 1,120,000. So hope we are together on that. So remember that we have said the number of shares at the end of the year is how much? 180,000. So don't forget that one. Number of shares at the year end is 180,000, where we have said 200,000 minus 20,000. These are the shares that we bought back. Then it gives us 180,000. So that is that. So now we are to give what? The reason now. We are to give the reason now where we were asked, if we can still remember, there was a question that we asked under 2.3. And that question was, let me go straight to it. The question was, we've already calculated what the net value assets. The question was, in your opinion, were the directors correct in issuing 650 shares per share? Bear in mind that the net value assets per share was, in 2019 financial year, was 600 cents. Provide two reasons. So let us go straight to it. Let us go straight to on giving our answers. So that is that. We are on 2.3, where now we are to give the reason. So what we are going to do when we are writing this director's decision, we are going to say director's decision. Were they correct? Were they correct? That is what you're asking yourself. Were they correct? So let us prove whether they were correct or not. Let us prove whether they were correct or not. Remember, the issue price of the shares is what? The issue price, we are told that is 650 cents. And the net asset value is net asset value per share. Sorry, per share in 2020 is how much? 622 cents. So net asset value per share in 2019 is how much? 600. This is the information we have, 600 cents. So in your opinion, is that were the directors correct? Yes, they were correct. Yes. That is our opinion. Yes, the directors were correct. Now we have to provide the reason. Why are we saying they were correct? That's very important. Why are we saying they were correct directors? So we are asked to do what? To give two reasons. Because shares were issued above 20, the shares were issued above 2020 net value asset. It is because of that. The issue price of 650 cents is higher than the net value of 622 cents. So that is that. That is why our first reason we are saying shares issued above 2020 net value asset value. We are saying shares were issued above the 2020 net asset value, which is this one, 2020 net asset value. So it simply says the issue price of 650 cents, which is this one, is higher than the net value assets, the net asset value, of 622 cents. So that is that. That is that. So the second reason that we can give is that the NAV, net asset value, increased from 2019 to 2020. So this symbol says to us that, this symbol says to us that the NAV, the net asset value, the NAV, rose from 600 cents, remember, to 622 cents, showing improved financial performance and growth in net asset per share, and growth in net asset per share. So that is that. That is the end of this presentation. That is the end of this presentation. Thank you very much for your time. Grade 12, make use of this presentation. It will benefit you. It will help you to prepare not only for your maths test, and also for final examination that you're going to write either in June or November. This is going to be very helpful. So make sure that you're going to share with others, and make sure that you don't forget to hit the subscription button. I thank you.